welcome back to Mortgage Ballers. This is Rich Hanlin, and today I've got a special treat. I have one of my longtime professional business friends, Natalie Dennis, with me. She helped me at my last company answer home loans when we were getting slammed. For some of you that don't know what I'm talking about, there was a point in time where you couldn't get an appraisal unless you were willing to bid it up a couple $1,000s to get people out there. What do you do when there's no appraiser coverage in the area? What do you do when people are screaming at you saying the appraisers aren't even picking up the phone and calling and setting the appointments? Who do you think handles all that stuff behind the scenes? Well, I found somebody, and because they did such a great job, she became our go-to. And Natalie Dennis is behind the scenes. She's the one that gets things done at an AMC. And today I've captured her because she's one of my top 6 people that I make sure I do business with. And that's part of my success, is keeping within those business relationships. But FastApp is the name of the company. Am I saying that right? First of all, Natalie, thanks for coming on. I appreciate your time today because I know you're busy.
Happy to be here.
All right. Talk to me. I always wonder if I'm saying the whole name right. I say FastApp, but is that actually the name of the company?
Yes, that is it. It's a little confusing. I say it's short for fast appraisal. We try to put the fast in appraisal. We're doing a good job these days. But like you said, there's a time where if we get that perfect rate market and we see the purchases and refis crash collide, right? It's then going to divert to not what you know, but who do you know, and do your people have a relationship?
Well, and it's I know this. I have called you after hours. I have called you on the weekends. I'm embarrassed to say that, but the real estate industry never sleeps. And truthfully, I probably haven't called her that much on the weekend, but I guarantee you I've texted and or emailed just to see if there was a warm response on the other end of that. And here's why. I've learned, and I have the trust, because people say, no, did you talk? I'm like, I don't need to, because I know she got it. She said, I got it handled. It's a done deal. It's in the right person's hands. I'm going to get back to doing what I need to do. What has Natalie done for me, let alone just being highly professional and having someone to call? Sometimes if appraisers, I've had bad appraiser experiences, and who do you call? Well, there's somebody over there to call. I want to make sure this person doesn't get on my panel anymore. If we have another transaction, if he comes up or she comes up, I'd like them to be skipped because we just didn't have a good, not because they're not good appraisers. Maybe they just didn't get along with my clients. I didn't like the demeanor, whatever. People don't realize that you can do those kind of things. But I think the biggest thing, I do deals for investors, and sometimes these investors, man, they find homes out in the craziest places. And a lot of times there's a lack of coverage. I think you explained to me is the right wording. And a lack of coverage means there's not enough appraisers, or if there's appraisers that sometimes even live out of the area that will travel into an area. And sometimes that's not what you want. And you'll have a real estate agent say, why don't you just use Johnny Hopkins over here? Because he's from the area. You're like, well, who's that? He doesn't even show up on the list. And they're like, no, he's a full-blown appraiser. He lives in the area. Well, of course we'd want that person or someone like that person. And we could actually call Natalie and say, Natalie, here's an appraiser. Here's 2 or 3 that the realtors are giving us that are probably more local for the area. And she can call and vet them and make sure that they meet the right requirements. And if so, we can get them on there and possibly even use one of them for this transaction. You want to make a real estate agent really happy is, if you can't find an appraiser very easily, get on the phone immediately and say, hey, listing agent, do you have anybody in that area? Because don't make it a secret. Get right on it, and boom, they'll give you 1 or 2. You do not want to hold appraisals up and then find out that they've got somebody sitting in their back pocket that's local that you might be able to use. And I learned that through Natalie, like asking me those questions over the years. And like, I didn't even know we could do that. So many people just push a button for an appraisal, push button, push button, push button. Oh gosh, look at me. Let me push the button again. For me, it's about relationships, and I don't always do cookie cutter loans. in cookie cutter places. I go where the opportunities are. My investors go where the opportunities are. And I have learned over the years that for me, I can do this job extremely well and look incredibly well when I have my team of people that I count on. And Natalie Dennis, hands down, is one of the best known people in this industry and has been for a long time. The fact that she even deals with someone like me, I feel like this big. And but she makes me look good, and I trust her. I have trusted people in my corner. How can I fail when if I have an appraisal question, I'm getting Natalie on the phone. I don't just call anybody. I don't go to the Facebook group. I go to the source, and Natalie she knows everything there is to know about appraisers, appraisal companies, AMCs, TRID, requirements, how to make things legal, what's not legal when you're trying to push things too much. But Natalie, talk to me. How did you get so good? Number one, you said what, 8 years in the appraisal business?
So 7 years on the vendor side.
7 years on the vendor side.
Mm-hmm. And then the first 18 was on the lender side. And that's where the real magic comes in is I was living on the East Coast, a whole decade over there. Wow. And I was at SunTrust when the market tanked. Yeah. And I actually got recruited to be a part of a brand new team that was responsible for rolling out HVCC, which when you say that, you go, oh my gosh, I'm so old. We're coming up on almost, 20 years of that, right? And it's hard to imagine like that much time has gone by, but I have solely focused only on the appraisal piece since 2007. Wow. So through that time, I became a collateral risk manager, basically managing the appraisal departments, managing the AMCs, onboarding. So I'm super familiar with a lot of the platforms that the lenders work on, right? Underwriting guidelines. And that's really where my expertise comes in of why I can help a client understand what is a Fannie Freddie HUD requirement. And I also, honestly, I can really, really help the appraisers. It's important that the appraisers trust you as a data source as well. So a lot of times, like one of my favorite little tricks that I can do, a lot of times people will order a USDA loan and then they have to flip to FHA and they don't realize that you don't need a new effective date. And you can put the FHA case number on the report with the original effective date. But a lot of people just don't have the guideline experience. And so one of my favorite things to do is just I take a screenshot of 4000.1, right? I'll send it off to the appraiser, ask them, here's the information you need for your file, your work file. So they have a paper trail of why we're asking them to do it. And then I explained that it's the underwriter's job in FHA connection, which, a lot of people in the AMC space don't even know what FHA connection is. But they go and they basically submit an override in FHA connection without needing to waste time or money on a new appraisal report. So there's a lot of little tips and tricks that I can provide to the client just to be of value to them.
No, you've done that for me too. That's what I'm talking about. Those questions come up. We go one way, and then all of a sudden we're going another way. And it's like, oh, do I need to order another appraisal? Can I use this appraisal? Do they have to go back out and do a different inspection if they're going to do this or that? Things like that. I don't mess around with that. So many people go to closed Facebook groups and stuff like that. And I'm like, I can't afford to be wrong. So where do I get most of my information? It's from these third-party vendors like Natalie, where I just pick up the phone and call. Natalie, this is what I have. No. Okay, Rich, this is what you're going to do. This is how this works. She does it every day, right? And she said something that a lot of people don't understand. I can't talk to the appraiser in most cases and say anything. She can. So if I have a little problem or I need some clarification, sometimes I can go to Natalie, and Natalie can call and in a roundabout way get that answer for me, some clarity, things like that. Is it still a thing? I haven't had one so long, but um, if you don't like your values, trying to get a revaluation, is that still a process that's out there? Are you seeing very many of those anymore?
So the reconsideration of value process is pretty much still the same. We
Okay.
ask, I think one of the biggest things, especially if it's a homeowner agent, right? We have to take the emotion out of it. And the goal is to just be data driven, right? So if the value is low, we have to identify what is making it low. Is it lack of adjustments? Is it over adjustments? Is it wrong comparables, right? So that is how we're most useful in that moment is
Or is the
trying.
value just not there? Oh, I'm sorry.
Correct. That too. That can be it too. And I think, not to jump ahead, but I'm a little bit nervous where we're at in the market right now. If we were to see, some really competitive rates that created a refi market, I any refi currently that is absolutely required for top value, we're not there yet. Do we think values have declined overall? No, but there hasn't been enough sales. We haven't seen a robust sales market in years. And those are the comps missing to get max value. So my cautionary tale in this, potential refi is if you can get away with something more moderate today and maybe refi them in a year when we see really competitive rates, sure. But if you're needing peak value, we just don't have enough closed sales data. Appraisers are still having to push all the boundaries of distant, all the standard things, right? Half a mile for urban, suburban, 6 months. All of those things have been so strained over the last 24 plus months, where we're having to push further in distance, further in time. So we're not quite there yet with the refis.
Okay. Nope. And you went through a scenario there. A lot of people don't realize that, you have the standard scenario, and this is where also good qualified appraisers come in. And anybody that works with Natalie, I know they are good, qualified, vetted, because the logic is, we follow the format, but what if it's not there? Is it just, oh, it's not there? No, we can expand if we have done our proper due diligence at the base level. Now we can expand it a little bit, but there's rules and guidelines to expanding and going further and further. Um, it gets harder. I mean, appraisers got to do a lot more work, and I don't know if the electronic appraisals have, have they hurt the system, not hurt the system? I don't know yet on that. I have people that can qualify. They're putting 30% down, 70% conventional. They don't need an appraisal, but no, I want one though. I want to make sure the value's there. Okay, well, I'm going to have you do it direct because it's not part of my transaction, but I want to make sure you have it. If I order it, they will see it and it'll automatically have to be entered into the transaction. So it needs to be done outside of my scope and not through my system. And that's where some people make mistakes. They actually order it and give it to them. It's like, but we can see it was ordered, therefore there's one on the record within the time frame of the loan. It's like, I need it. Um, I don't know if people want to buy houses without appraisals. That could be good and bad. Um, Electronic stuff. I mean, now we have what is it? Redfin? Is it Redfin that just got bought by
Mm-hmm.
Rocket?
Yeah.
So I mean, let me make sure I understand this. So a loan company is going to own real estate possible company. It's just a window into real estate. It's not a real estate company. Let's say it like it is. I'll be nice. But the same valuations. I mean, so many people when I list houses are like, when's it going to show on Zillow? And I'm like, well, who cares? That's not where the realtors are. Oh, but I want to see it on Zillow. I'm like, but that's not where the offers are coming from. The offers are coming from here. It's on Metro List. Look, you're getting all kinds of people. No. I want my friends to see it. Like, it's kind of interesting. So, we get all the looky loos, the window washers from Zillow. But what's funny is I go on Zillow all the time just looking at houses because I don't want to take the time to log into my Metro List and put parameters in there. So we have a lot of readily available information. Do you think we will ever? Well, value-wise, you might get there, but condition-wise, Zillow will never answer that question. What are you seeing as far as conditions of properties? Because to me, that's where the justification is. Because if something goes wrong with that house, an appraisal is a inspection report, and it should be used as such. Because don't come back to me 6 months and say, "Gosh, no one caught such and such." It's like, yeah, but you didn't get this inspection or this inspection or this inspection. I know it costs a lot of money, but I'm not a contractor. Most people aren't. And things do go wrong even with brand new houses. Are you seeing second and third appraisals being required as much anymore? Or, um, people pushing values? Do you see pushback? I know you're really heavy with kind. How does kind, or they just have pure trust? Natalie says it's worth 800,000. It is 800,000.
No, I think it's important to always make the customer feel heard. I really try to, in every situation, I've purchased homes myself, close my eyes and pretend like I'm that borrower who does not do what we do all day, who doesn't
Right.
understand, and they deserve to be listened to and walk through the process. So a lot of times, an approach that I take, somebody had emailed me the other last week about a low refi. And I just looked at the report and I kind of walked them through it. And I said, so appraisers do not like speaking about price per square foot, but it's really the language that the agents and the borrowers speak. So I try to be the middleman, right? That can kind of bridge that gap and speak to them where they can understand it. So if you were looking at the appraisal, all the comps were closing for about 330 a square foot. The appraiser brought it in around 350, but they really wanted it more in like a 375 range. And it honestly, by meeting them where they're at, not that an appraiser would necessarily approach it as a price per square foot, because it really only covers two things, right? Size and price. And there's so much more. There's amenities and pools and solar and all these other things that add value. That's why they don't like talking about it, which makes sense. But when you break it down to a client in that way of like, hey, there, unless you have closed sales that are closing at this 370 price range, right, per square foot, we're not going to get there. And the appraiser already brought it in well over the average price per square foot. So this is what I see. But if you have the smoking gun, let's go, right? Like my appraisers, definitely, I do everything in my power not to make my appraisers feel like their intelligence is attacked or whatever, right? To keep that open door policy with them. If we miss something, it's our job to fix it, right? And we're not always 100% right. The goal is to make it right, right? To fix the mistake. And so if we did mess up, if we did miss a sale, honestly, sometimes my appraisers, I've had one that's been on hold for 3 weeks because they really needed this pending sale to close for them to get where they needed. And so we put the
Mhm.
order on hold. It was a refi and it was really, really tight. And the appraiser said, we can get there, but I need you to give me more time. And I might need a trip fee for a new effective date, but we can get there. And I think that's the kind of, right, when you have a relationship, when your appraisers care about the people and it's not just about fee and turn time for them and not just a number, I think they stop and they put the extra love into it. And I know that the clients really appreciate it too, because what they could have done is just submitted the report short, the deal's dead, right?
Yeah.
But what we try to do is provide options and partner with our partners of, hey, even if it's we can't do it right now, when can we do it, and is there a path to get there? And that's the ultimate goal, is to provide a path to get there.
Yeah. No, I like it. One of the things that frustrates me about the appraisal industry is the VA portal. I cannot figure out for the life of me why cannot have a payment thing in there to where we can get them paid right away. Because as soon as we get it, we got to get it paid. They want, they have all the rules. It's like, well, shoot, give us a payment option, because then I got to mail a check off. That's going to take forever. And depending on how big your company is, we try and get them as fast as we can, but I can't always find them all. I'm in every state. I mean, 44 states, and every county within those states, I mean, there's no way to just push a button and sweep and see what's been paid and what hasn't. I mean, that portal has not been updated for a long time. And I'm thinking, it really isn't this hard, but the VA appraisers kind of get to do their own thing out there while everybody else has to go over here through these portals. But I'm like, come on now, you guys got to get a little bit better because I want to do more VA. I think it's an incredible transaction. I'm not mad at the appraisers. I think they would want to get paid faster too. But I'm like, it's not that hard. How come someone like FastApp hasn't gone in there and says, hey, VA, we need to partner. We'll give you the portal. Is that just not allowed in any way, shape, or form? Am I the only one that bitches about these kind of things after all these years?
It's the government. I mean, what can you do, right? They're on a class of their own. There's a blessing and a curse to being a VA appraiser too. Most of the VA appraisers actually won't and don't do any other kind of work,
Yeah.
primarily because they get really good fees. The downside is they do not get to decline work. So if they are signed up for whatever counties, no matter how complex the order is or the distance, they have to take it. There is no negotiation. So the VA can also, within that, just keep them very busy, right? And so they get a lot of extra money on the easy ones, and they're taking a loss on some of the harder ones. And we've been in a tough market these past 24 plus months. So they've definitely put their time in, but when things pick back up and we see a refi boom, that's when they'll, get their rate of return. And some of those easier ones, they're going to get those $800 fees. So,
Right. No, I agree. Where do you see, I mean, obviously you're in the know. What's the next big thing coming out from the appraisal side? I mean, where are we going with appraisals
we got
as
a
we
big
head
one
to
coming
AI
actually.
and all this stuff?
So, this fall, I think November is the cutoff date, but this is actually a really, really big year, and I don't hear a lot of people talking about it. Um, we are moving to a universal form. That's what they're pushing for.
For
So
all loans, there's not going to be VA, FHA. Is that what you're talking about?
So no. So right now, we are used to, if you have a single family, you have a 1004. If you have a manufactured home, you have a 1004C. So all the forms are numbered, right, for Fannie and Freddie. They're going to a universal form where basically the way it starts for the appraiser is they start asking and or then questions, right? And as the appraiser starts filling out the form, other boxes will expand. So one upside to it is a lot of times, especially towards the bottom of page 2, where the as is and subject to boxes are, there's a couple of subject to options, which can be confusing to a bar, or not just the borrower, but the loan officer as well. And then a lot of times, the subject to items, there'll be a sentence that says see addendum. And then it's like, where's the addendum in the 60 pages? How do I find the repair items? So the good news is as the appraiser's going through the form and they're saying, are there repair items? If they check yes, additional commentary boxes will open right then and there. And so a lot of this stuff will be found in the spot where they're answering the question. But it's going to be very interesting. The form will kind of take a life of its own. For example, if there's multiple units, it's going to start opening additional boxes, additional questions. So it's going to start as one form, right? And then just work its way into a condo, a single family with accessory unit, whatever, as the appraiser goes along. So there's a lot of unknowns. And it's something that one of my lenders just reached out to me before this call, saying, are you ready? How will it impact fees? How will it impact turn times? And I said, well, people need to really start talking about it. So what I do is I go to my appraisers first, right? That's something that I can control. Some appraisers in our more rural areas, they're very concerned that older appraisers are not going to want to have to relearn. They might just say, I'm retiring, or I might just take private use, divorce, right? Those ones that maybe won't force the universal form, and they'll take it the old way that it's always been done. Um, how will that change fees? I know that some appraisers have indicated this will push the hand of needing to do your inspection with an iPad, some piece of technology. You can't just go with your measure laser anymore in your little, notebook. So that's going to be a lot of big news coming in the next few months of how are we going to roll this out. I think mixed with that too, they rolled out, I think it was 2 years ago, but no one really talks about it, is the property data reports. So Fannie and Freddie both call it something different. At the end of the day, it's the same form, just a, different label. And what are those? And a lot of people are very surprised by those. When you touched earlier on the condition of the property, I think the birth of the PDR was Fannie and Freddie get to see credit. They get to see income. They get to see job history. I think everything tracks for them, right? And they feel like the borrower's not a credit risk, if you will. But what they're not sure of is the house hasn't been listed actively on the market or traded, say, in the last 5 or 10 years. And they just don't know if this 15-year-old home, 20-year-old home, 30-year-old home, what condition it's in. And so the last piece of that puzzle is we're good with the value that the loan officers put in. However, we're just not sure if the property's been properly maintained. So how can we get away with not a full-blown appraisal, but just get some eyes and ears in there as far as condition? So I think the heart of it was right. And I think this really, really popped up as a reaction to what happened during COVID. We had a massive boom, right?
Yeah.
And we couldn't get appraisers out fast enough. And then there was a lot of concerns, right? No mask protocols, all of the things. And so I think this was the byproduct of that. The downside is with anything new, same with the forms, right? Everything's going to take time to learn and to become the new normal. It's no different when a lender rolls out a new LOS. Brokers run from that. They almost won't even sign up with a new lender because they don't want to spend the time to learn the new LOS, which might be helpful, but it's just people they get you in their routine and it's hard to break. So with the PDRs, they're basically sending out people that some companies require at least some affiliation to the real estate world. They have to be a realtor. They have to be a home inspector. They have to be something, right? Other vendors don't require anything at all. It could be like the Uber and the Lyft, right? Sign up, we'll send you out. They're using a tripod and usually an app on their phone. And ultimately what they're doing is they're just taking a 3D rendering of your home. The tripod does its thing. And then all of those photos are loaded directly to Fannie and Freddie, and their AI is scrubbing it. Here's the problem. I had one where it had a basement, one of those ceilings that has like the metal tracking and the little things you can just push up and move. There's just some wires hanging down, not exposed wires, but just wires that just needed to be tucked back in. But the AI reads it as a health and safety. Well, now that the AI has failed the report because it doesn't give you a value, they're just checking it for condition. What do we do now? There is no secondary step. We are familiar with, in our space, if we did an appraisal, we'd be ordering a 1004D. They don't have that option yet. So unfortunately, what we're having to do is now order two PDRs, where the second PDR is to go back out and basically do the rescan of the exposed wires or what the machine perceived as the possible health and safety, and then we're reloading it. So that still has its downfalls, right? I'm sure we will figure out. We're not, being the first to complain and work through it and go, hey, can there be an even cheaper option, right? And so we're not having to pay for a brand new one. Can we roll out a 1004D for these as well? We haven't gotten there yet. So because it's new to market, we're still working through some things. A lot of homeowners actually don't realize those inspections for a standard size house, 2,500 square feet or less, they're taking about 45 minutes because that 3D scan takes a minute. The people, depending on what kind of company you're working with, if you have someone who's familiar with types of countertops and finishes, they're probably asking less questions. But if you're dealing with a vendor that, is just sending out Jane Doe, then Jane's going to ask you a bunch of questions. What kind of counters are these? What kind of cabinets are these? And it can be very off-putting to a borrower who wasn't prepared for that. They don't understand. They think that they're appraisers and they're not. And so, but they have to answer these questions, right? So we're working through all the kinks on all of these things. I think they'll come in handy if we are to hit a purchase and refi boom with the right expectations. And I've started actually telling my clients that choose to go that road. I make it very clear to them, please notify your borrower that the inspection's at least a 45 minutes and they're going to ask questions. And then that way they're a lot less upset by the end of it, and set better expectations, right? And just communicate that. It's not a licensed appraiser. I think they only need about 10-20 minutes to measure from the outside and take a couple of photos. And then the rest of the work is done behind the desk or driving around to shoot comp photos, right?
Yeah.
So just setting those expectations moving forward, and a lot more to come, a lot more bumps to come with the switching on these appraisal forms. It's going to be new and bumpy for all of us.
Well, that's why I use people like you so that I'm not going to worry about that. I'm just going to push an order appraisal through FastApp. And if people don't realize it, but so FastApp is an AMC, right? They have appraisers. So when you get any lender that you do business with, you can say, hey, what AMCs do you have? And we're already approved with FastApp. So it doesn't matter what lender you go to, as long as they have FastApp as one of their AMCs, it usually a drop down menu, just put it in there. So I know that UWM, I know that Kind, are two of our biggest, number one and number two, and we get a lot, from that. Not everybody realizes that. Like, how do you get logins for FastApp? People always call me, Rich, and your logins. I'm like, no. You just sign up and say you're with Xpert Home Lending because you want it all to come to you, not to me. How does that work?
Just shoot me an email and I can get you logins. It takes about 30 seconds. If you're doing expert correspondent, easy peasy, right? Doesn't matter who your lender is. You can order with us 100% of the time.
Okay.
UWM right now, just basically anything not conventional for UWM. And then all of the wholesale lenders, in reaction to a Fannie Mae communication they pushed out, should all be working pretty much through a platform now.
Okay.
So, like you said, the Kinds, Lone Star, Sierra Pacific, all of them, PRMG, we should be on the other side of all of those lenders. Like you said, just make sure that a particular broker, if you're located in Georgia, ask your AE there, say, hey, can you just make sure FastApp's allocated in my rotation? Because the wholesale lenders, they're controlling it, but definitely taking the feedback of their brokers to make sure that their brokers are working with the people they like to work with.
Yeah. I mean, if I can get FastApp, I realize I'm not always getting the same appraisers. Number one, we're in 44 states. But so California appraisers are going to come out and do Wyoming or whatever. But I get Natalie. I'm assuming you overlook the whole entire account, no matter what state it's in. So I get Natalie no matter what. But I did want to point that out to people because I have people say, "Oh, I want to get a panel, get these people on a panel." I'm like, "Cool," but that's only for a local area, right? There is no appraiser that's going to travel across state lines unless they're right there at Texarkana and they can cross over like in 2 seconds. But for the average person, they're like California, they're Nevada, and I do loans in all 44 states. So I have to have trusted sources. So I trust the AMC FastApp to know that I get Natalie, which controls the appraisers, and I get a very consistent experience for my clients. Because I am amazed. Everybody just assumes that the houses in California are like the houses in Georgia, or like the houses in Wyoming, or like the houses in downtown New Jersey, and they're just not. It's a very different world out there. And what's important in one state, homes are built differently depending on where you're at. They have basements, no basements. There's walk-in basements. There's crawl-out basements. There's storm basements. I mean, we got all kinds of stuff. Tell me this. With this kind of came out about a year ago. You don't hear about it as much, but then all of a sudden somebody will hear a conversation. The ADUs. Did you see a lot of people add ADUs on their properties? Was that a big deal when they allowed that? Do you see a lot of that?
So in California, I mean, they even were usually the first to push the hardest, right? And so they basically will allow anyone to build up to 4 units on a lot, a residential lot, without needing to jump through the hoops. And so, of course, ADUs have become a big thing because there's a housing shortage, right? And obviously, with all the fires and all the other things that have popped up, and if tariffs could kick in, right? Getting your hands on products just to rebuild is just a nightmare within itself as well, right? So a lot of different layers, especially, but yes, people are building them. We talk about them a lot because for the time being, the accessory units, I put them in the same bucket as I would a pool or solar, especially if you're in California. The reason why I say it like that is because pools, swimming pools, I mean, you used to be able to get one pre-COVID, probably 60 grand for a cookie cutter pool. Your new starting price is somewhere between 80 and 90. It's a lot of money. And a lot of times you're only seeing an adjustment of $12,000, $15,000 on an appraisal, right? Solar is really gotten that way too. And there's not a one size fits all for solar. Some solar, there's enough panels to actually power your home. And then some people only do part solar, right? Not enough. So solar runs the gamut as well. Sometimes it can, and I know people that spend the big bucks that do the Tesla solar, which is not the same as the sun run solar and all of the things, right? So at the end of the day, you're not going to get just like a pool. You're not going to see that line item adjustment. If you spent 90 grand on the Tesla solar, you're not going to see a $90,000 credit on your appraisal for that. So, what I always say with the accessory units, you will see the value come back. For example, if you are a borrower and perhaps you need the additional rental income to qualify, you will see the benefit of that accessory unit help you in a different way that might not be a line item number adjustment. So if you spent 150 to put it in, but you only see a 25,000 adjustment on your appraisal, but that $1,500 a month that you're using to rent it out helps you qualify. So it definitely has value, but it by no means is going to be of the same value as it took you, especially for those that are going the permitted route. Now, Fannie, Freddie, HUD allow for unpermitted additions finished in a workmanlike manner. So it's not a requirement with the large investors for those things to be permitted. But the asterisk is, will it be an issue for homeowners insurance? Will it be an issue in other arenas that, could impact it? I don't have the answer to that. But I know as far as you getting the loan from any of the larger investors, that shouldn't be an issue as long as it's finished in a workmanlike manner. Yeah.
Well, I appreciate that thorough answer. Yeah, I've always been kind of disappointed on the pool thing. I think a lot of people are. You spend a lot of money and it's like, get it because you want it, because you ain't getting dollar for dollar. And either I've had people buy a house with a pool and fill it in, say we don't want a pool, but we like the house, and you're like, oh my god, that's my nice pool. And I've had somebody move in and say, there's a pool underneath there and it's got dirt in it. I'm like, is it still usable? I've seen that down in Sacramento. Very interesting. And obviously, a pool that's not working, people don't want to fix it. And I've seen them trying to sell a house with a big, hole in your backyard with a pool that's health and safety. So all of a sudden, it's like, well, fill it in. And people are like, are you really bringing dirt and filling that in? Yeah, people do it all the time. It's kind of crazy, but they do it. Um, Man, Natalie, that's what I'm talking about. You're just always just full of nuggets. It's nuggets and nuggets, more and more and more and more. Here's a question for you that's totally, totally 100%. off of appraisals. When you're not in appraisal mode, which isn't very often, what kind of hobbies do you have? What kind of things do you like to do when you're not in business mode? Because we're always in business mode most of the time.
The ongoing joke with the family, extended family, is if I'm not at work, I'm at club volleyball. So I
Club
have
volleyball.
a 15-year-old, and she is a club volleyball player. And so the same passion and fervor that I pursue this appraisal gig, I just take onto the volleyball court. And I am that mom who is screaming and yelling and cheering. And
So she got your
so
height, is what you're saying.
Actually, she's 5'9", I'm 5'2", so she definitely got her dad's height, and she's a middle blocker, and seeing her do things that I never in my wildest dreams at 5'2" could ever accomplish. It's so exciting as a parent to watch. I love it, and so that is literally pretty much my life. Those are the two things that I spend the vast majority of my time on.
Well, that's good. You're allowed to have a life. I knew you had a life in there somewhere. And I felt bad because I know how much when my deals are running, how much I'm picking on you and asking questions. And so it's a kiss of death too, because you are accessible. I don't think you've ever said, "Hey, Rich, not a good time." It's like that's why I'll text say, "Hey, I don't need to get back to me right away." And I think that helps. 'Cause I know Natalie will get back to me, but I know she also has a life. So it's like, hey, this is what I'm up against. Cool. Let me get back to you. And that's, if people understood that that's okay too, to tell people I can get back to them versus, I always need to have an answer right now on the spot. No, not necessarily. We're running into, are you seeing any of this? I'm seeing a lot of, getting back to the days where people are selling a manufactured home on a piece of land that they did, but they never put the permanent foundation on it or the aftermarket. But there are companies that will come in and the appraisal will say, "Hey, subject to putting a permanent foundation," and these companies can come in and drop a permanent foundation and do everything prior to the close of escrow. Are you seeing any more of that? We're starting to see that more in Georgia, where because there's land and people are getting the homes out there, they don't want to wait. They're trying to build value that way versus stick built. But I haven't seen that in a lot of years. Back in the day, you could do a FHA. You could carry the land and the manufactured home, have it done within 90 days, and boom, you already had the pre-approval for a refinance because you actually owned the land and you already negotiated with them. So even though you never lived there, it was actually a refinance and you already had the pre-approval. It's like subject to sign off permits and permanent foundation. And I like it because we're starting to see that come back. And I'm amazed at the quality of these homes, um, to get people in because there is a lack of homes and not everybody wants to live in an apartment. They
Mhm.
seem like they're building a lot of apartments, not homes. But
If you've done that, what I'd love to see, that way it saves time and money, get do the permanent foundation up front. Appraisers have been getting hammered during the
mhm.
slow time. FHA is actually auditing them independently after the loans are closing, and all the nice things that we really try to do of the foundation cert is dated after the effective date of the original report. Those appraisers are being fined by HUD post closing. Yeah, it's been really brutal. So I think there's been a shift too, and I think we all know because a lot of us have been doing this for so long. Every time the origination slows down, the auditors just come out in force, right?
Well, I
And
think they
then
have like 5 years, don't they? Like they can go way back.
and
You're
they
done
just
and forgot about it, and they're just getting around to it a couple of years after the fact.
Well,
You're
and
like,
all they're
what the
doing is
hell?
shifting bodies, right, from the front end, trying to do the originations and get them in closed and funded, and they shift them back to auditing during the slow times. And so that's really hard too, is because I think the appraisers sometimes get the bad rap of they're trying to make it subject to so they can get that reinspect fee. But I will tell you this: going back out to the property for 10 minutes for the reinspection is about the same amount of time they were there for the first one. and the fees are drastically different. They could have been doing a full-blown inspection on a different property. They don't want the re-inspection fees. They don't want, it's actually a waste of their time and it slows them down. So if it's not on a permanent foundation, just do the work up front. And then that saves you on a final, it saves you on all the stuff. And then if after your loan's done, if you decide, just keep in mind that the conventional requirements is the stick-built house has to be larger than the manufactured house. And then what we can do is we can always appraise it down the road as a single family home with an ADU, which the ADU would then be considered the manufactured home. But it's the larger of the two homes are the ones that are the front runners on the report. So
Okay. I shall keep that in mind. It's there's so much going on out there. Getting outside of California, you start to realize that it's not the same restrictions. It's not as difficult. Some places allow you to do things that you're not allowed to in other places. Good, bad, whatever. I don't know. I've never seen such big homes in Georgia. I mean, I've 13,000 square feet homes, and you're like, two people living there, and they're just giant. Like, what? Whoa. My neighborhood has big homes because the basements are finished, but to me, it's like a floor on the house is 3,000 square feet, but it's a basement.
mm-hmm.
I call it's part of the overall square footage, but my house looks like a single story house, but it has a walkout basement and, it's 3,000 square feet below the ground. It's kind of interesting. I never saw that in California. I saw some of the older houses. Shoot, I saw downtown Sacramento on some of those. They had wood, or not wood floors, but dirt floors underneath the wood. If it's a 100-year-old home downtown Sacramento, and I'd be like, "What are you talking about? There's dirt underneath that floor." But they just depend on when these things were built. It's just crazy. I mean, so much changes over the years. I now have to pay attention because southern Georgia we lend on, and they do get hurricanes and things like that. And it's interesting looking at the housing that's down there. And you're right, there's certain homes that should not be in the path of a hurricane or a tornado. They're not designed for it. Yeah, it's just I'm not sure one size fits all. Also figuring out that a lot of people are moving around because they want to experience home ownership. It's my hope that we can keep putting people in the homes, and I think everybody should have a right to own a home. It might not be right where you want it, but if you're okay with moving, there's a lot of places that are still very affordable. And I'm not gonna lie, my wife and I totally miss California. There's a lot of stuff we miss about California, but I have my sons here, I have my grandkids here, and it's okay to have change and adapt, and that's kind of what we've been through. You obviously you saw the 2008 2012, we had to change and we had to adapt. This last couple of years we're doing it again. It's real estate didn't take the big hit like it did. It slowed down, but values held.
Mm-hmm.
I'm not sure how all the tariffs are going to work coming up. I'm just kind of trying to be flexible here to see where it goes, but I could tell you this. I was sharing with you that we've had January, February, and March have been 3 back-to-back record months for us. So something's going on out there as a whole. 44 states. It's not one given state. I got a guy in Albuquerque, New Mexico, all of a sudden telling me Albuquerque's booming.
Mm-hmm.
Wasn't quite ready for that, but Georgia's still been a good place for people to go. People have backed off Florida a little bit. I was just down there this weekend trying to look at some different houses and things to see what's actually going on down there.
Mm-hmm.
Maybe there's some value out there. One person's hardship becomes possibly one new person's blessing. I don't know, but I know who I call when I have appraisal questions. I know that. No matter what's going on in the market, I call Natalie Dennis. How's the old Ghostbuster? Who are you going to call? Natalie Dennis. No, Natalie, man, I appreciate you so much. I'm so blessed because I have these incredible people in my life. I have, and here's my thing. I wanted to get you on the phone to tell you this too. I wanted to tell you thank you. I wanted to tell you that you're one of the people that I feel like I'm where I'm at in my life because of all that you've done for my companies, which in turn does it for me. So I want to say thank you from Answer Home Loans, where I met you, to Xpert Home Lending. I'm very blessed because I have these incredible business relationships, and you're one of those. And so I can't help but say thank you for all that you've done for me, for my family, for my companies, for the people that partner with me in my companies. It really, really means a lot to me.
Thank you so much. And I'm the same way as you, Rich. Like, we work so many hours, and it's nonstop. And genuinely for me, I couldn't do this if I didn't feel like the people on the other side of the transaction, like you and a lot of your top producing loan officers and my appraisers, you're like family to me. My team has followed me. I was at a different company, and that's what matters the most, and that's what gets me out of bed, because this industry can be grueling.
Yes, it can.
But I know without a shadow of a doubt, I have people that truly lean on me, right, and really need me, for various reasons, and so it's a motivating factor to show up every day. Is the people on the other side of matter, and so thank you, because you're 100% part of what makes us tick and keep on moving and not giving up.
No, I appreciate that. I always want to say thank you to those because you never know if you'll how many more days you have left on the earth, let alone in the business, stuff like that. So I'm trying not to miss those opportunities. That's part of the reasons I wanted to get you one on one. Number one, just to remind people, I've been sharing a lot now that I'm getting from behind the desk. Like, well, Rich, how do you do it? Well, I start with my relationships. There's about 6 of them, but one of those actually an AMC. The two I have Atlas title and placer title, depending on where things are at. But if it's California, I go placer title all the way. I got Anita Blazer. That's my relationship. And then if it's outside there, I use Atlas because they can give me that small fill, even though I'm sending them all over the United States. They've done a real good job with that. But refinances will come back eventually. They always do. We could have some interesting times. I think there's going to be some incredible opportunities. I'm not sure how that's going to play out, but purchases are always there. And something's going on. There's a movement going on. We've seen it now almost 90 days worth. And I hope you're ready for it because I think we're going to possibly have an interesting second half of the year unless there's something that's missing. But if we're continue the way we are, this is going to be a record year for us. I know that. So I hope it's a record year for you too. Well, Natalie Dennis, there you have it. Hey, if you don't know Natalie, I'm going to have all of her contact information down in the body of this. I'm going to make sure everybody has it, your contact, reminding them of what you do, how you do it, why I use you. Natalie, you make me look good. You really do. And when I'm dealing with the realtor partners, they trust me. So I got to go where I trust my sources. And you've always been one of those people. So thank you very much for that. But I just want to say again, I can't tell you how honored I am for all the time and effort that you've done and made me look good, even on a personal basis in this industry. I've done a lot of transactions and people just learn to trust me, but they don't understand it's an army behind me of incredible relationships. And you've never let me down. Matter of fact, I always learn something every time I talk to you because you're always in the know. And I don't need to guess appraisal questions. I just go to Natalie and I get it exactly what's going on. And it sounds better when it comes out of my mouth because she says it properly, where I'm sitting there trying to act like I know what I'm doing. But man, thanks for just getting on the phone with me. I know you're busy. Giving me an hour of your time. But I can't say thank you enough. But like I always say, when we have an incredible interview with a top person in the industry, Natalie Dennis of FastApp, stay thirsty, my friends. Natalie, thank you so much for your time today. I do appreciate it.
My pleasure.
All right. You take care.